Thanks, Justin. Hey, listen, it was a crazy day on Wall Street yesterday, up and down today as well. Yesterday was just a bad day. Right now, the Dow is sitting at just what? 11 points, and earlier it was down 120, like literally, 20 minutes ago. So Analyst Steve Budin here to answer some questions, because we got to talk about this. First of all, what happened yesterday?
Yesterday was a confluence of a lot of different things. It was just a lot of fear that came into the market at one point. To keep things really simple, some indicators telling us how the economy was doing looking forward came in really negative, and that really spooked the market. And the unrest overseas in Hong Kong and how that affects China is really beginning to scare investors. The long-term effects of that nobody knows. So you couple that with the threat of trade issues with us and China, all of that coming together really hit it once. And that's what happens with these markets a lot of times, is you'll coast along, and then boom, something happens and it drops very quickly.
Yeah, I mean, it's enough for people to wake up and go, okay, what does this mean for me? What does this mean for my 401k? What does this mean for me? Because we like to talk about ourselves a lot. So what does it mean for folks? I mean, if you're my age, say I'm 43, do I have to worry about anything, or do I just sit back and ignore it?
No, there's nothing to necessarily worry about on a day-to-day basis, but it's always good reminders that you should always be able to take enough risk that you can sleep at night with, right? It's easy when things are going up. In fact, in our office, the phones never ring when the markets go up. They only ring when the markets go down. It's just human nature. People get afraid and they get nervous. Everybody has their own tolerance for pain. And once you figure out for yourself what that is, that's what you should always be in, regardless of a good economy or a bad economy.
So as long as it's kind of up today, everyone should feel better, or are we going to have an up and down week, rest of the week and into next week?
I think you're going to see a lot more of this. I don't think the markets up until recently priced in all of the uncertainty out there. And we talked about this on a lot of financial focuses in the past, where I think the issue in Hong Kong is a serious one and the markets are ignoring it. I think with interest rates being where they are, with the bond markets telling us certain things, the bond market tends to take a longer term view of the economy. And when the 30-year U.S. Treasury bond hits a record low, that's telling me that the bond market is really nervous going out into the future about how our economy is going to look in the next 1 to 2 years. Now, I will say that, though, predictions are very tough to make.
Sure.
People are asking me all the time, like, when's the recession going to hit?
You're like, well,
I don't know. I can't predict the future, but I do know we haven't had one in 10 years. So it's just a matter of time, and it's not a bad thing to have a recession. It's good to prepare for it, but there are a lot of uncertainties out there that could lead to a recession, but one will happen at some point.
Yeah, and Zillow performed a home price expectation survey. Now, they asked more than 100 real estate economists and experts to give predictions about the U.S. housing market and a possible recession in 2020. And they were saying that something that could set it off were some of the things that we had just listed on the screen, which was more things about the stock market and the uncertainty and that kind of thing. So what do you think about that?
Yeah, well, I will definitely say that the people that they survey and a lot of these things have been wrong so many times before. So making predictions, especially with the economy the way it is now, is really difficult. But a lot of those experts do give credence to a lot of the warnings.
Right.
The trade issues. If interest rates stay down, it's great if you're a borrower. You can borrow money at low rates. But if the banks stop lending, which is what happened 10 years ago, it doesn't matter how low interest rates get.
Right.
And that's my concern, is that you have certain things going on in the bond market where it's not advantageous for banks to necessarily lend. That could really, muck things up a little bit, because if the banks lend, that's what helps the economy grow. People can borrow money to buy houses. People can borrow money to start businesses. If that begins to slow down, then it could lead to a recession.
Yeah, about 10 seconds, but I just wanted to say, in Las Vegas, it seems like things are on the up and up for 2020. So to think recession just doesn't even seem
right. No, and you're right. And the way these projects go, there are years in the planning, and they take sometimes 2-3 years to build. So right now, things look great. But as we learned in the past, things can turn quickly. I'm not saying it will, but the markets are sending out some signals that we need to be careful.
Yeah, don't start calling Steve and saying, you said. All right, thanks, Steve, for coming on and kind of breaking that down for us. Financial Focus with Steve Budin. Stay with us. We're back after this.